Hello, good evening, everyone. It's Tim Davis here coming to you guys with another weekly market review. And today is Monday, August 8th, 2022. Want to start by taking a look at a weekly chart. Weekly chart of the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above their 200-day moving average. And right along with the overall markets for the past couple of weeks, this has been trending higher. And look where we are at now, right back up the top, at the top of a trend line, which is the top of the channel that this has been trading in for the past several months. So what the bulls would like to see is a rally out of this channel and on to new highs and new higher heights. Will that happen? We have to see, but more than likely, it will stall out right where it's attempting to stall out now. So this, again, this weekly chart, you see where we are pretty much stalling out right there at that trend line. We did it here, and we did it here. And let's see if it does the same thing that it did the last couple of times. Each time it got to that trend line, we eventually pulled back to the bottom of the channel. And the next one was a pretty long trend down back to the bottom of the channel. So do we go back to the bottom of the channel now, or do we break out? We'll have to see. My guess will be that we will, since we've been in the upward trend for quite a bit, more likely we will pull back and start to head back to the bottom of the channel. Right now, the percentage is showing just about 33% of the S&P 500 companies trading above their 200-day moving average, which is still in a bear market. We look at the wins percentage. Wins percentage right now is in overbought territory. Okay, so that's something to keep in mind, that the percentages was on their way up, but now it has reached a level of resistance. Now, with that said, let's take a look at the VIX and see what the VIX is telling us. We're going to take a look at the VIX futures. And this is a weekly chart of the VIX. And I'll point out a couple things right away on this one. We are right back to a level of support on the weekly chart of the VIX. Right back to a level of support on the weekly chart of the VIX. We hit it there. We hit it here. And we hit it here. Each time we hit this level on the VIX over the past, since the beginning of the year, we have found a way to rally. Will we do the same thing here? Or will we break down and the VIX start to really break down below 20 and head back down in teens, signaling another bull market? I doubt that very seriously. My guess would be that the VIX will start to finally find its way to churn higher. If you look at the stochastics, it's in oversold territory. Look at the wins percentage, it's been in oversold territory for quite a bit. So right now the signs for the VIX are leaning more to an upward bias, meaning that the overall market should be leaning towards a downward bias in the near term. Now, keep in mind this week we have CPI data comes out on Wednesday. So just notice markets today were a little, a little muted. The markets were, almost at a standstill. They were up, they were down, they were up, they were down, and almost finished at the flat line. I mean, the market's probably waiting for some significant data to decide which way they're going to go. And it would be my guess that since we're stalling out at a level of support on the VIX, that we could possibly see the VIX start to rise and the market start to fall. There was some disappointing data today that came out with NVIDIA. So that was signs of weakness. I think Take-Two Interactive showed some signs of weakness, and Novavax showed sign of weakness. So that could just be the beginning cursor of what we are probably going to see throughout the rest of this week. Take a look at the S&P minis. And we're going to switch back to a daily chart here. And I'm going to take a look at the daily chart using the moving averages, because there's something significant happening on all of the major averages, is that they have finally made it back up to a serious level of resistance, which is right back up to the 200-day moving average, folks, on the daily chart. Back up to the 200-day moving average, which is going to be a serious level of resistance for the major averages. And if we look at a weekly chart, we're back up to the 50-day moving average for the major averages. So that is going to be a very strong level of resistance. So just like when we hit a strong level of support, we normally see some type of rally, like we did during this bear market run, bull run within a bear market. We hit the 200-day moving average on the weekly chart, and we bounced hard back up to another major level of resistance, or another major moving average line, which is back up to the 50-day on the weekly chart. So more than likely, as we saw a bounce at the 50-day, we're probably going to see rejection. As we saw a bounce at the 200-day, we're probably going to see rejection at the 50-day on this weekly chart. And back to the daily chart. Again, we are hovering right around that 50-day, that 200-day moving average. Look at what price action been doing over the past several days. It's been stuck right at that 50-day moving average. I'm sorry, I keep saying 50-day. Right at that 200-day moving average on the daily chart. S&P E-minis have been stuck right there, waiting for a shoe or signal for prices to have a reason to go lower. Do they have a reason this week? Yes, they do. Some not too good earnings reports from some of the tech stocks, and we have CPI data coming out this week. So that may be the catalyst to actually start the next major move, which probably is going to be a move lower, since we had a rally, bear market rally since the middle of June. I think that's probably going to fizzle out here in probably this week. That's a look at the S&P E-minis. And if we look at the Dow Jones E-minis, we're going to see the same scenario, right back up to that 200-day moving average. Right back up to that 200-day moving average, and prices are doing what? They're stalling out right there. Look at the momentum indicators. Look at the RSI. They were all in overbought territory for quite a bit. All in overbought territory for quite a bit. You think that's going to last? No, I think it's time for the overbought territory to ease, and we're probably going to be really in store for a move lower over the course of the rest of August, more than likely. Let's take a look at NASDAQ E-minis. Same scenario. NASDAQ looks to look a little bit weaker, and the reason why is probably because of NVIDIA and Take-Two. So it's starting to pull back away from that. Starting to pull back away from that 200-day moving average. The past couple of days, we've been pulling back away from that 200-day moving average. So that is very negative for the NASDAQ. And looking at the Russell 2000 E-minis, same scenario, stronger of the bunch, but it too is being stopped right at that 200-day moving average. And look how overbought and that's another reason I think that Russell's probably really going to be starting to reverse, because they had a nice little run off of this level of support. Had a nice little run off of level of support since the middle of June. Nice little run right back up to that 200-day moving average. And look how overbought it got in the RSI. RSI is significantly overbought at a 84 level, 84 RSI on the daily chart of the Russell 2000 E-minis. So I do suspect that we're going to start to see a trend lower in all the major moving averages. So that's something we need to pay close attention to. Haven't looked at this in a while, but let's take a look at crude oil. Crude oil looks like it is reaching a level of overbought territory. Oversold territory. So crude oil is interesting right here. I'm curious to see what crude oil does. Crude oil has dipped below its 200-day moving average on the daily chart. So I'm curious to see if crude finds some footing right here and start to trend higher. Let's take a look at a weekly chart. Looking at a weekly chart, all signals point that crude could be in a state of oversold territory. So if we look at the RSI on this daily chart, this is the daily chart I'm looking at. Weekly chart. It's a weekly chart. We are hitting oversold territory on the weekly chart, folks. RSI showing oversold. For stochastic showing oversold. Wins percentage showing oversold. Could we be ready to rally or bounce in crude? That is a strong possibility. I believe once we see what happens on Wednesday with CPI data, if for some reason that data is in favorable of a market pullback, we could see the opposite of crude. So paying close attention to that this week, because crude like it is definitely in a oversold state. Let's look at crude. Now let's take a look at gold and silver. So gold and silver is it was in oversold territory, and it's starting to bounce. So this is a weekly chart of gold. See how it is in oversold territory? So we hit oversold territory in RSI on the weekly chart of gold, and we're starting to bounce. Oversold on full stochastics, oversold on wins percentage, which is starting to cause these particular commodities to bounce. Now we're heading right back up to that 50-day moving average. We're watching this very closely. If CPI data finds a way to not be as good as folks believe it should or would, we could see a significant bounce in gold, pushing it back above this 50-day moving average. So I think that CPI data this week on Wednesday is going to determine what happens across assets and what happens across the commodities as well. Take a look at silver. Same scenario. Been in oversold territory. Oversold territory for quite a bit on the weekly chart since the end of June all the way through July, and now it's like it's trying to come out of oversold territory. So I do believe gold and silver is setting up for a bounce. So we gotta see what happens on Wednesday when the CPI data comes out. All right, folks, that's all I have for you guys. Just wanted to show you guys what the charts are showing us. Just be mindful. Again, we have data coming out this week. We had some negative reports from Take-Two Interactive today, as well as NVIDIA and Novavax. So that could very much well be setting up for what we're probably in store for the rest of this weekend, maybe the rest of this month. All right, folks, until the next video, this is Tim Davis here signing off. Enjoy the rest of your week, and I will see you guys sometime later in the week.